So I feel simultaneously greatly honoured and greatly burdened with expectation, given the background speeches, the introductory remarks, and so on. Let me say, first of all, this has been the culmination, or it is the culmination of a journey which, as Alan said, has been going on for more than a year. And I have to say I had my doubts on several occasions during that journey as to whether we'd get to this point. So it is good to be here. And maybe this is just a staging post. In fact, I think it probably is a staging post. This is not the last word on the policy-making process in relation to water charges and the local property tax. It mightn't even be the last word of the Whitaker Institute on the matters. Why water charges and the local property tax? Why did we make them the object of this piece of research? Well, both were part of the post-crisis fiscal consolidation. Both were, if you like, austerity measures. Each was initially targeted to yield around 500 million in revenues. That's not the way it panned out, but they were the targets adopted at the outset. Both of these measures shared a troubled history in the Irish context. There had been previous attempts made to introduce water charges, which culminated in 1997 with the then Minister for the Environment writing a piece of legislation that outlawed the charging for water by local authorities. And a similarly troubled history characterised property tax, residential property tax. There was one in the late 80s and 90s, but it ran into the sand and it was abolished in 1997. And effectively, these two measures were taken off the policy agenda for the next 10 to 12 years, right? Nevertheless, despite all they had in common, and despite the fact that back in 2010, there was probably no compelling reason to believe that one would be much more problematical than the other, it turned out that one was implemented successfully and the other became a debacle. So what are the objectives of this report? I think the first objective was to write a balanced and dispassionate account of these two episodes in public policy making in Ireland. The second was to better understand why the outcomes were as they were. The third was to examine the role of the policy-making process in those outcomes, with a view perhaps to identifying examples of good and bad decision-making. And the icing on the cake, if we had time, if the cake suggested it needed icing, was to draw lessons for the future. And I'm a bit hesitant about that part of it. I know that's what everybody wants to know. Part of the reason I'm hesitant is because I think, to some degree, the water charges episode in particular was sui generis. It was unique to its time and circumstances. And I think one of the things we have to realise in examining both these policies, but particularly water charges, is the enormous stress and strain that the system of public administration was under during this period. Okay? A quick reminder for those who have forgotten and for those who never knew, the timeline for the local property tax, the principal elements in it. Well, the first thing that should be said is that property taxation was not a proposal that originated with the Troika, right? The first proposal, or the first time it was proposed to reintroduce property taxation, was the Fianna Fáil Green Renewed Programme for Government, which came in October, November of 2009. That commitment was subsequently reiterated in the National Recovery Plan and then found its way into the Troika programme. and of course was subsequently reiterated in the Fine Gael Labour programme for government. At the time, the commitment was to the introduction of what was called a site value tax, right? Not the tax as we now know it. First step on this journey was the enactment of a household charge, which was a simple €100 per household levy. And that came into effect in January 2012. And at the same time, the government decided to set up an interdepartmental group to advise it on, if you like, the ultimate or the permanent property tax, the household charge being an interim arrangement. That tax was enacted in December 2012. In May 2013, a deadline for registration for the tax was reached, at which point the compliance rate was 87%, which, given the history, short as it was, of the household charge was a pretty high compliance rate. So the tax itself came into effect for the second half of 2013, and its first full year of operation was 2014. Another important milestone in the evolution of the tax, or in the policy-making process, was the review of the tax carried out by Don Thornhill in 2015. Key decisions in relation to the local property tax, as I see them. Market value was the basis for estimating liability rather than site value. And that decision was made at an early stage by the interdepartmental group on grounds which would have included ease of applying the tax, transparency, simplicity. The notion of market value is better understood than the notion of site value. So if you want a transparent tax that's easily understood, clearly market value commends itself, even if site value has a strong economic rationale behind it. Valuation bands rather than point estimates. So this was to ease compliance. If you have a house worth, for argument's sake, 170,000, it's hard to be sure whether it's 170, 180, 160. So your house is valued in the band 150 to 200. Another important decision was to be parsimonious in relation to exemptions and waivers, right? So there's the conditions for exemptions and waivers are well defined and limited. And the purpose of that, the thinking behind that was, again, in the interests of simplicity. But also recognizing that there is a trade-off between the number of exemptions that you give and the rate of tax consistent with a particular yield. And the trade-off is obvious. The more exemptions, the higher the rate of tax has to be for any given yield. And this is a lesson that might well have been usefully imported into the water charges discussion. In order to address the issue of affordability or ability to pay, there was a deferral option. There is a deferral option. So if property owners meet certain criteria in relation to income, they can avail of the option of deferring the payment of the tax. There's a local discretionary factor, plus or minus 15%. But the key decision in relation to the property tax was that the revenue commissioners were charged with collection and enforcement. And that wasn't inevitable, because its precursor, the household charge, was collected by the local government management agency. And this was a tax, of course, the proceeds of which were going to go to the local authorities. So it wasn't by any means a done deal that the revenue would end up collecting it. It could have been the local government management agency. And amongst the intimidating battery of weapons that the revenue have at their disposal to enforce payment of the property tax is this ability to deduct it at source from payroll or from state payments, social welfare payments, agricultural grants, and so on and so forth. What are the outstanding features, the most prominent features, again, as I see them, of the policy-making process in relation to the LPT? First, attention to basic principles. And the basic principles, the most important of them, are principles of simplicity, of transparency, and of equity. The fact that implementation challenges were anticipated and folded into the design of the tax is another prominent feature of the policy-making process here, right? And if you look, for example, at the Interdepartmental Group's report, you will find that a large portion of that report concerns itself exclusively and explicitly with issues relating to implementation. I think another point, which actually I don't make in the report, but is nonetheless a feature of how the process unfolded here, is that the political and technocratic perspectives, the political and technocratic dimensions or contributions to the development of the tax were well aligned. I'll give you a good example of that. The technocratic recommendations, dare I say it, coming from the Interdepartmental Group, they were the technocrats who were given the responsibility of suggesting a design for this tax. They were very, very strong in their recommendations that exemptions and waivers be kept to a minimum. And you might imagine that when that kind of recommendation would hit the road and become exposed to politicians, that the politicians would say, no, that's far too restrictive. We want tons and tons of exemptions, right? That's the nature of politics. But the interesting thing is that the list of exemptions in Budget 2015, when Minister Noonan announced this tax, the list of exemptions was not much longer than the list of exemptions that had been proposed by the Interdepartmental Group. And even subsequently, the following year, when there was an amended act introduced, partly to reflect concerns that had been articulated over the previous 2 or 3 months, even at that point, the list of exemptions was kept very, very tight. So there was a common understanding of what this tax was about and how to best go about implementing it between the technocrats and the politicians, right? And of course, the other feature of the policy-making process here is that there's an active review procedure, which is underway at the moment. In fact, we're into the second review of the tax right now. And it's not often in an Irish context we get the opportunity to study a policy-making process from concept right the way through to review, because I suspect reviewing policies is a relatively recent development. Okay. Despite all of the above, the caption here is the LPT, a conditional success. Not a total success, not an unambiguous success. Yes, the yield targets have been almost met. I'm not going to quibble over 40 or 50 million. Yes, there have been very high compliance rates, 96, 97%. Yes, and critical to the continuation of the tax is that there appears to be widespread political acceptance, right? In particular, Fianna Fáil has come on board. Well, I shouldn't say has come on board, but perhaps Fianna Fáil was always on board with a property tax, right? But the majority of TDs currently in Leinster House are in support or belong to parties that support the property tax. However, there is strong resistance to increasing the yield from it, right? As you know, property values have increased very substantially since the original valuation that continues to underpin the yield and underpin estimates of liability for the tax. That was a May 2013 valuation. We have already passed the first scheduled revaluation date, which was November 2016, right? And we're now at the cusp of making the decision as to whether a revaluation should take place at this stage, and if so, what kind of revaluation should it be? But there does appear to be a strong predisposition in government circles, and perhaps in political circles generally, in favour of the notion that the yield from the tax should be kept stable. In other words, that any increase should be minimised, right? And that, in turn, prompts the question as to whether this is a tax that will actually endure. Because already the proportion of total tax revenues accounted for by the local property tax has declined from 1.2% in the first full year of its operation to 0.8, 0.9% this year, right? If the yield from the tax as a proportion of total tax revenue were to be maintained, a fairly modest ambition, were just to be maintained at its 2014 ratio, we would be generating this year something like 650 million from this tax rather than 470. If we were to take, dare I say it, the leap of the imagination required to think in terms of maybe generating 2% of total tax revenue from this tax, well, then we'd be talking about a yield of about 1.1 billion, right? And the extra yield that would be generated by moving from where we are now to moving to a rate of tax that would generate 1.1 billion would be enough to pay for a 1% reduction in the standard rate of tax, or a 2 percentage point reduction in the higher rate of tax, or any other combination of measures costing 600 million that you can imagine, right? But we haven't got to that point. We haven't got to the point, it seems to me, of accepting property tax as a permanent fixture in our system of taxation. Because, look, if we continue to cap the revenue from it at 450 to 500 million, what's going to happen is that inevitably it will account for an ever-diminishing proportion of the total. And to that extent, the opportunity cost of eliminating it, of abolishing it, will decline, such that in 10 or 15 years' time, 450, 500 million will be a relatively small amount in the overall scheme of things, and therefore the cost of abolishing it, you know, not trivial, but not forbidding. Okay, let me move on to water charges. Yeah, there's great symbolism in that, taking off the jacket. The first thing to say about water charges is that they were part of a multifaceted, integrated, ambitious, coherent, and, dare I indicate my own prejudices here, sensible reform of the water sector. So there is a limit to the comparability of the local property tax business and the water charges business. Water charges was much more complex because it wasn't just about charges, it was about metering, it was about installing an economic regulator, it was about setting up a single water utility called Irish Water, probably one of the most popular corporate entities in the history of the Irish state. And the overarching objective here was not to raise money, right? The overarching objective was, well, yes, it was to secure adequate investment for a very ambitious program of improving the water infrastructure and bringing the damaged and disrepaired parts of it up to speed. And a key target in all of this, and this is where things get quite arcane, was to get Irish Water off the government's balance sheet so that Irish Water could borrow on the strength of its own balance sheet and remove water infrastructure as a source of competition for scarce public funds for sectors like education, health, transport, and so on. I mean, this was a beautiful concept. Absolutely. It was totally coherent. Every element of it made sense in its own terms and was clearly integrated with the other elements, right? So where did it all go wrong and why? Very quick run through the timeline. Again, as in the case of the local property tax, water charges were not an invention or an imposition by the Troika. They were first proposed officially proposed in the Fianna Fáil Green Renewed Programme for Government. They had been recommended also in the Commission on Taxation report that came out that year as well. Just a couple of dates here that are more important than others. The decision to set up Irish Water in December 2011, the incorporation of Irish Water in July 2013, which was important for a number of reasons, including the following: that the meter installation programme could not begin until Irish Water was set up, unless, of course, you wanted each local authority doing its own thing in terms of meter installation, and no coordination across the country, or limited. First tariff structure, in other words, the first charges plan, was announced in July 2014. That generated a lot of pushback. There was a new tariff structure announced in November of that year. I'll show you a table in a moment that contrasts the two. Water charges actually took effect from the 1st of January 2015. And then in July of that year, critically and fatally, well, maybe the patient was already moribund, but this dealt a serious blow. Irish Water failed the so-called Eurostat Test. In other words, failed to achieve the classification required for it to be able to raise money on the basis of its own balance sheet and be taken off the government balance sheet, right? And then in June 2016, charges were suspended. Okay, the next few slides deal with the three elements of the water sector reform programme that the report focuses most on. One is metering, two is charging, three is the Eurostat test. So in relation to metering, quickly, first question, to meter or not to meter? Might seem obvious. The answer is, yeah, you should meter, you should measure. But not everybody, a lot of professional engineers said this is not the priority. Metering is not the priority. So, okay, there was a decision made to meter. Question then, the next logical question is, well, do you install meters universally across all households? Or do you give households the option to go for metering, right? And perhaps incentivize them to do so, as is, well, I don't know about the incentivization, but in the UK, there is an opt-in system. At an early stage, at a stage long before the Fine Gael Labour government was formed, the decision, or the political system, let me put it that way, the political system had indicated a strong, almost implacable preference for universal metering, right? An unalterable preference for, because it was seen to be self-evidently the fairest way of doing things, right? Self-evidently is an important word because there was really no rigorous evaluation of the evidence here, right? And an interesting point to make about the metering decision is that, yes, there was a cost-benefit analysis done eventually. I think it was in 2012. But the cost-benefit analysis of metering that was done after the politicians had effectively decided that metering was the way to go. Besides, that cost-benefit analysis was quite limited. It really only evaluated the option of universal metering against the status quo of no metering and didn't evaluate any intermediate solutions. There was an early commitment given by Minister for the Environment Hogan, shortly after the government came into power in March 2011, not to commence charging until all households were metered. And I think that was a commitment that resulted in the government losing at least some credibility, because there were technical impediments that were effectively going to prevent universal metering taking place before water charges were introduced, if water charges were going to be introduced in line with the Troika agreement. You couldn't complete universal meter installation within 3 years. And you certainly couldn't complete it within 3 years if at the same time you're proposing to set up Irish Water and do nothing about meter installation until Irish Water was up and running, until Irish Water was incorporated, right? And Irish Water was not incorporated until the middle of 2013. Meter installation started in August of that year, and the subsequent completion rates are set out in the slide. If you look at the figures for 2014, the proportion of households metered at the start of the year was about 6%. By the end of the year, it was about 40%. And the significance of that is that that was the year in which water charges were originally supposed to be coming in. So they were going to be coming in an environment where somewhere between 6 and 40%, depending on what point in the year. Well, the date eventually settled on was the 1st of October. 32% of houses metered at that stage. So over 2/3 of households on the public water supply not metered. I could spend a long time talking about this table, and it would get me into trouble with Dave if I'm not already in trouble with Dave. So let me just pick out a couple of the main points here. One is free allowances, 30,000 litres of water per annum for households, 21,000 for children in the original July tariff structure. The volumetric rate, €4.88 per 1,000 litres. And of course, because only a minority of houses at this stage were metered when the rubber hit the road, there had to be an assessed charge, and the assessed charges are set out there. There were some caps in the original July tariff structure, but those caps were temporary. The average charge per household was going to be €238. In November, a number of months later, an entirely new, a radically different tariff structure was announced, from which the household allowance had been eliminated, the volumetric charge had been reduced from €4.88 to €3.70, and caps had been introduced such that for one adult households, the maximum charge was going to be €160, and for households with 2 or more adults, it was going to be €260. And they were gross. Also introduced was the water conservation grant worth €100. So in net terms, the cost of water to one adult household was going to be €60 a year, and to households with 2 or more, €160 maximum. A few remarks on the tariff structure. How much time have I got?
-5.
Ah, Jesus, are you serious? Oh, no. It's just horrendously difficult to distill this stuff into a manageable space. So I'm just going to have to tear through the rest of it and hope that everybody has read the report. Just a few remarks then, bullet points about the tariff structure. This was a tariff structure, the original tariff structure, the one that created that huge wave or preceded that huge wave of protests that took place in autumn of 2014, was a tariff structure that tried to reconcile multiple constraints, right? So it was a tariff structure that was to be volumetric, in other words, with a charge per use element, that wouldn't have a standing charge, that would incorporate free allowances for households, and that would generate enough revenue for Irish Water to be classified as a market corporation by Eurostat, right? One of the things that I think was only realized relatively late in the day was this idea of a trade-off between the volumetric charge and the existence of free allowances. And again, the trade-off, simply understood, is as follows: that the more water you give away for free, the greater the volumetric charge, the greater the usage cost must be for any particular revenue target, right? And the problem that led to in turn was a problem that there was very considerable dispersion of the household bill around the average. So the average bill was 238 euros, but the dispersion around that average was very large, right? Interestingly, when the November tariff structure was announced, the words used by the government to explain it and rationalize it were certainty, simplicity, affordability. The certainty element is interesting here because it is very difficult to reconcile certainty with the introduction of a volumetric charging regime. I mean, it's necessarily the case if people don't have meters, if they're not measuring their water consumption, they don't know how much water they're using. So you introduce meters and propose now that you're going to charge on the basis of metered usage, and people, well, clearly face a very uncertain prospect, at least in terms of their initial bills. All the more so if at the same time there's this thing going on that they will be held liable also for the water that leaks in their external pipework. Okay. In the interests of popular participation, I'm just going to go through 3 more slides. There are 6, but I'll just do 3, right? And the Eurostat test slides are important. People talk in terms of the Eurostat test as if it was just a matter of satisfying a formula, an easily digestible formula. But actually, what came to be known as the Eurostat test is more properly understood as a classification process, right? In which there were 2 elements. One is a qualitative element, which looks at the relationship between the entity being classified and the government. And basically, that element will be failed, that element of the test will be failed if Eurostat judges that the relationship between the entity and the government is too close. The second element then is the quantitative element, which is that sales account for 50% of production costs or more. My reading, and it's quite extensive because I've got a lot of email traffic which was made available through Freedom of Information. My reading of the conversations and discussions that the Irish policymakers were having with each other and with the CSO about the Eurostat test suggests a couple of conclusions. One, that they were focused almost entirely on the quantitative element and not on the qualitative aspect. And secondly, that they paid very little attention to a concept that the quantitative element is predicated on, which is the concept of economically significant prices. In other words, if Eurostat deems that the prices you're proposing to charge are not economically significant, well then, by definition, you fail the quantitative test, right? Okay. The CSO is Eurostat's representative on Earth, or Eurostat's presence in Ireland. Interpretation of the Eurostat Gospels is a matter for the CSO. And the CSO, this may be a slightly simplified model of how the decision-making and interpretation goes, but the CSO is responsible for interpretation and communication with Eurostat, and then for disseminating their understanding to other Irish officials. It's interesting to contrast the position taken on the classification of Irish water by the CSO and by Eurostat. And bear in mind, the classification was applied in early 2015, so it was based, amongst other things, on the November charges plan, on the radically revised charges plan. So, the CSO implicitly assumed that the economic significance of prices was not an issue. Eurostat took the view that the prices that Irish Water was proposing to charge could not be regarded as economically significant because of the caps, right? And the argument here was straightforward. If the maximum charge for a one-adult family is 160 euros, and it's invariant with respect to consumption, very large volumes of consumption, well then it's not economically significant. The CSO took the view that the cost of the child allowance of 21,000 litres per annum should be included in sales. Eurostat took the view, well, in the first instance, prices are not economically significant, so the cost of the child allowance cannot be included in sales. But in any event, treating the child allowance as sales would be a very bad principle to concede, because you could be given allowances not only to children but also to other groups and so on and so forth, and dilute the whole economic purpose of the exercise. CSO took the view that sales to households should be accounted for on an accruals basis despite the prospect of widespread non-payment. So we were looking at a system where water charges, the compliance rate was between 50 and 60% on a good day. And CSO was saying, well, actually, that doesn't really bother us too much. We're going to include what's due rather than what's paid. And Eurostat said sales to households should not be treated as an accrual, given the resistance to charges and given the emerging picture in terms of compliance rates, and so on. And if we just focus on the quantitative element of the Eurostat process, the CSO estimated the ratio of sales to production costs at 54%, which meant pass. Eurostat, on the other hand, estimated, they provided a range of estimates for the same ratio, and that range was from 26 up to 48%, depending upon how many of their objections were taken on board in the calculation. But Eurostat went further than that, and they said, well, anyway, this quantitative element is moot, perhaps, because of the nature of the company's relationships with government. So we're not even sure that this is a company that passes the qualitative test. Okay, I'm going to race through the next two. Water charge shortcomings of policy-making process. In summary, and subject to elaboration when we get into discussion, there's a disconnect between design and implementation, particularly, I think, in relation to metering, but not exclusively there. Alternative courses of action were not always properly evaluated. I mean, a classic example of this is the free allowance. That was adopted by the political system, dare I say it, on the basis that it was self-evidently a good thing, not on the basis of rigorous evaluation. There was a failure to fully understand the implications of a number of decisions, not the least of which, and probably the most egregious of which in a way, was understanding the implications of seeking this independent status for Irish water, of producing a set of numbers, etc., that would pass the Eurostat test. That was definitely not properly understood. But my overarching feeling, looking at all of this, is that the water sector reform programme attempted to achieve too much too soon. The tariff structure itself represented a big regime change, and there was very little allowance made in design and implementation for transitioning, right, from what was a system where water was free at the point of use to a system where water was going to be measured, charged for on the basis of measurement, and generate enough revenue to pass this Eurostat test. And of course, not that I'm qualified necessarily to talk about this aspect, but and maybe there is a case to be made for a discrete piece of work on this. The whole business of communications and messaging was an area of shortcoming. Okay, I'm going to leave it at that.